Okay guys, back to the Answers Hub today. Let me flick this over. This is a little question for Andy. Little salute to you, and it's a great question. How do you combat overtrading and the urge to trade? And he was doing this in response to Nathan. And I think it's fantastic that the guys are trying to help each other. It really is. And they do get in with each other. And they talk all the time. They have a little bit of merriment. You know, a bit of a sing-song, but then they do get into the nitty-gritty of what's going on. They have a real good chat. They back each other up with a small success. Then they start talking about whatever trade it is they do in the day. And if they're stuck, they can come down in the video library, which is just for these. It'll never be for sale. And they've got things like the way of the scruff. And there's thick end of 50 modules there telling you exactly how to trade. This is the key to overtrading and the urge to trade. Why is that? It's education. If you're educated and you understand what you're doing, you can make a logical choice. But most people think trading is very easy. Oh, give me a strategy and I'll make $1 million because I've seen it on YouTube. Yeah, I've seen ghosts as well. Doesn't mean to say that they're there. And doesn't mean to say that they're real. It's amazing what you can see on YouTube and CGI. Everything with trading starts and ends with you. And the first thing you've got to be able to recognize is whether or not you're suited to be trading. Now, on my board today, it's today is the best day. It is the best day. And I always have little reminders as to why I'm trading. This helps with the urge to trade. Even down on my cup, there you go. Simple stuff. Why? Because simple stuff work. Day trader. Got cups all over because I drink way too much coffee, because we all know Scruffy likes it coffee. But what are these? These are little reminders every day of what I'm doing. Now that slogan, today is the best day, has resonance in the fact that why do I trade? I trade for freedom. So I want today to be the best day. I don't want to be a slave to the machine. I'm finished now. It's 25 past 10 in the morning. I was finished roughly about 9 o'clock because I planned my day out. And that's the key element. You have to plan it. If you just go, oh God, you're going to be rich. No, any strategy works. Moving average cross works. Golden eye definitely works. Fib works. Push works. Golden cross works. The mini skirt works. There's hundreds of strategies you can use. And they all work. But they only work if you've planned it. Now, if you can't plan, you're probably destined to fail to start with. I'm lucky. I come from a business background. Everything I do is geared towards a set of tasks to get a certain outcome. And it's the way I'm conditioned. But there's a simple way you can do this. You can do it through monetary targets. Now mine is, I'll kind of give you an idea. I work to a baseline on my day trade account of 30,000 a year. Now I've had people scoff at 30,000 a year, which is fantastic considering they can't even make £300 a year. They're always on a loss. But if you broke it down, it's not as difficult as you think. I work to 48 weeks a year. That gives me a month to be wrong and have a little bit of time off. Okay. I don't like trading Monday. I don't like trading Friday. So I trade 3 days a week, mainly. Okay. Well, how do I get 30,000 out of that? Well, if I do 200 a day for 3 days at 600 a week, across 48 weeks is roughly 30 grand a year. So I already know I need about 200 quid a day. So I have a parameter that's set. Okay. What's the market willing to give? Well, on average, you'll get around 3 opportunities per day. I do because I trade the London session. What's that? Between roughly 7 till 10 in the morning is a good opportunity because you're going through the European and London Open and the crossover of Asian. So there's a good bit of volatility as the market sets up. Between 1 and 3, you've got US data coming in and the opening of New York. So again, there's an opportunity there. And then between 4 and 6, the markets are then calming down and you've got a good opportunity there. So there's 3 opportunities. So I already know I only need 3 trades. Okay. Well, how do I get my 200 quid? Well, if I'm looking to trade the DAX, getting 20 pips is relatively easy. 5 a point is 100. Do that twice out of those 3 opportunities. And that's it. Job's done. So instead of trying to go to the market like a machine gun, I've actually planned it out before I even go to market. I know what I'm doing, know what I'm looking for, and I know how many opportunities I've got. Now, if I'm going in as a scalper, I can't do 2 trades to get 200 quid. On a 5er, I'm going to have to do loads of trades. So what happens now is I put myself in front of the freight train, and I know I might have a lucky day, but the chances are I'm going to get caught, which is why, well, I've been in the industry 20 years. I've never seen a scalper make it yet. Not one. And I know professional traders that are far better than me, because I'm not the best trader in the world, guys. I'm not even close. You know, I'm just a guy who does a job. But these guys are the top of that game. And I've met them through various conferences over the last 20 years. And not one of them's seen it. The day traders and the swing traders and the position traders are who make the money. And they do it consistently. Now, when you're thinking about this 30,000 and the 2 opportunities that I'm looking for, how else could I put something into this? Well, it's very simple. I do what's called a risk profile. So I'll put 10% of my account up per week. Now, a lot of people go, 10%, you must be off your merry tit. Well, no, not really. Because 10% of the account split across 5 working days, because there is 5 working days, is 2% a day. And I've just told you I'm looking to do 2 trades. So that's 1% a trade. Very, very simple. You know, so at best I'm 2% a day, per day, which is why sometimes on your sheet you see me do what's called a daily allowance. You know, and that's my allowance for the day. Now, if I'm a scalper and I'm doing the 2% per trade and you're trading 20 times a day, it's a damn sight more than what I'm putting on. So what I'm driving at here is the desire to trade should be taken away with planning. Now, there's also another element to it. When I go to market, I've already agreed to what I'm doing. I know what my parameters are, so I'm as cool as a cucumber. Your emotional context will be dialed up to 9 and 10 because you're all excited and you want to be in the market and you want to press the button all the time. Killer. Mine is dialed down to 1 and 2. And I have no emotional connection with it whatsoever. Why? Because it's just a job. I planned it out, do my tasks for the day, and when they're done, I'm finished, go home, do what I need to do, and that's it. You know, just like anybody going to an office job. They'll go in, switch their computers on, make a cup of coffee, start putting in the data inputs or doing whatever it is they do for a living. And then when the bell goes at 5 o'clock, they put the coat on and go home. I do exactly the same, except mine's flexi time, and it's what's called job and knock. Now, if you're on a building site, you'll understand what that means. It means the job might take you 2 hours to do it. It might take you 12 hours to do it. But you finish when that job is complete. I was finished at 9 o'clock this morning. Near enough. You know, done my tasks and I'm done. All these things help you stop. So when it comes to overtrading, just calculate how many trades that you take per day and half it. So if you're taking 10 trades a day, wean yourself off it by taking 5 and cap it. Say I'm only allowed to take 5 trades. Personally, I would calm that right down to a 30-day challenge. And I tell the guys that everybody that comes in the squad, do the 30-day challenge. 1 trade a day, 1 asset, minimum size. So the minimum size is taking the greed element away because you've only got 1 position size to work with. 1 asset makes you focus because you're looking at the same asset day in, day out. So you'll get a feel for what it is instead of playing helter-skelter, jumping from one chart to the next. And then you run it for 30 days. and you have one trade a day. And if you have a positive expectancy, in other words, you end with more than you started with, and you had less than 30 trades or less, you pass. You've earned the right to move on, and you can maybe trade twice a day. If you fail, in other words, you have negative expectancy, you ended with less than you started with, then you're not really calling the market very well, and you go back and do it again, and you focus in, because you should be starting to read conditions. But if you took more than 30 trades in that 30 days, you fail again, because you failed the discipline. You're only allowed one a day. And it doesn't matter what you're doing. So if you go with a live account, you stick with a live account. You don't go live and then go, right, I finished that, I'm going to do a bit trading on a paper account. That's a fail as well, because that means you're going back to markets again. The idea is to read the market and then walk away. That's how you combat overtrading, and it's how you start stopping the urge to trade. And that's the way I did it, and it's how I was taught many, many moons ago when I went through this. Because I've been through this as much as what everybody has. Yes, it was my job and one thing and another. I used to live on daily charts, and I had the brainwave of, if I'm on a 5-minute chart, I'll make a gazillion and I'll be in and out the markets every 5 minutes. I learned the hard way. That is not how you trade. Patience and waiting is where the money is. So, hope that helps, guys. And as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.